Trade tensions taking center stage. President Trump will host a White House event showcasing American products from all 50 states today. The display follows escalating trade tensions with Europe, Mexico, Canada, and China, a battle that has American manufacturers wrestling with the fallout from Trump's tariffs. Joining me now, Gordon Chang, author of The Coming Collapse of China. Gordon, this even follows President Trump's threats to impose tariffs on all $500 billion worth of Chinese imports into this country every year. The Commerce Department had a hearing last week about imposing tariffs on auto imports. That still remains to be seen. But how much retaliation can we expect from China? How dangerous is this to the United States economy, you think?
Well, the Chinese certainly will retaliate, Dagan. But, they're really, first of all, they've run out of bullets. So we only export to them by $130 billion or something. Right. And we take from them $505.5 billion. Last year. It's going to be more this year because we've got a robust economy. A lot of people say, well, the Chinese can retaliate against U.S. companies in China. But Chinese officials don't want that to happen because they're worried about the effect on the Europeans and others who are investing in China. And they think that could really boomerang on China and hurt Beijing much more than it hurts us. As
Treasury Secretary Steve Mnuchin he amplified President Trump's trade threats in Argentina over the weekend at that G20 meeting of finance ministers. The secretary said this, quote, that he wouldn't minimize the chance of the U.S. imposing tariffs on all its $500 billion worth of Chinese goods that we import into the United States, but he still promises a light at the end of the tunnel. So listen to this, and I want to get your reaction.
President Trump is determined to have free and fair and more balanced trade, and we just want to make sure American companies and American workers are treated fairly. And yes, I do see a light at the end of the tunnel.
How do you think this plays out? So do you think that it doesn't get to the point where we do slap tariffs on all imports coming in from China?
That's a real possibility. We've got to remember that this is for the theft of U.S. intellectual property and its forced taking. These are imposed under Section 301 of the Trade Act of 1974 after that investigation into China's thievery. So, yeah, we call this a trade war, but really this is about a remedy for thievery. It has trade implications, of course, but we got to do this, Dagan, because the Chinese take hundreds of billions of dollars of U.S. IP a year. This is just unsustainable.
Well, then why didn't we take the tack that was pushed by Peter Navarro in terms of cracking down on Chinese companies buying entities here in the United States and then the technology exports into China? Instead, we kind of took a little bit of a lighter touch with the increased CFIUS restrictions, our Committee on Foreign Investment in the U.S. That was more what Secretary Mnuchin wanted. That's what Congress is moving to do. They actually came out of conference last week with how that would be applied. So they basically strengthened CFIUS. So why didn't we do more? Why didn't we take a harder approach on that note then?
Because we're Americans and we are so oblivious and have been for a very long time. You start to see a change in Washington. Started in the last year of the Obama administration when the president used CFIUS to block a Chinese deal. And then President Trump has blocked 2 or 3 acquisitions under CFIUS. So this is going to be something we're going to see much, much more of. And, yes, people don't like tariffs, but now we're starting to think about the alternatives. And, of course, it's investment bans, but also it could end up sort of being like an import ban. If we're starting to look at goods that have been benefiting from China's IP thievery, there's all sorts of things that the administration can start to look at.
But does this administration need to start talking about how this is going to play out in the U.S. economy? More specifically, say, hey, $500 billion worth of imports. Everybody in this country, if you buy anything made in China, you're going to pay more for it. Hey, farmers, you've got 2.5 billion pounds of meat that's now piling up as production, as exports slow to these nations. You have soybean farmers that are getting hit. There is going to be pain, and it could be widespread. But does this administration need to be really frank with the American people about this?
Well, it certainly does. And President Trump has hinted about the pain, but clearly you cannot have decades of really bad trade policy and policies on IP theft and not expect that the U.S. isn't going to suffer at all. We are going to suffer, but we actually have to do this because of the scale of China's predation.
So there's a lot of people out there who are saying this is a game of chicken and that ultimately that the Chinese are going to have to give something up here. How long do you think it's going to take before that we're going to be feeling this pain until there's some movement?
You know, we could be in a decades-long struggle with China. You know, when the Treasury Secretary talks about having equal access to the Chinese market, that's just ridiculous. The Chinese system is designed to prevent access of foreigners into China. And under Xi Jinping, the current Chinese ruler, it's become less open than it was before. So, you know, this is going to be a long-term struggle. So we can be in this for a very, very, very long time.
Well, China's already devaluing their currency. They're releasing reserves for the banks. They're preparing, and they must be feeling the pain right now already from these early moves on trade. What brings them to the table?
Well, I think that when Xi Jinping realizes that there's no more Chinese economy left, that's really when you get to the point. Now, look,
we have that power because, again, if we want to take more power away from, if we want to take more power away from China, then we stop running $1 trillion annual budget deficits, which is where we're headed in the 2019 fiscal year. That we stop spending so much money and we don't have to lean on China so much to buy our debt because we can try to control spending.
Yeah, I don't think we have to worry about the debt. The one thing, you know, if President Trump really wants to hurt the Chinese economy, he just allows Chairman Powell to raise rates. Because what you're seeing right now is U.S. interest rate increases are affecting the Chinese economy. Money is coming out. And, you know, you go back to this whole thing about the currency. I don't think China is actually devaluing its currency. The renminbi is declining. It's tumbling. It had its worst month ever last year against the dollar. Last month. But the point right now is that the Chinese people are not expressing confidence in their own currency. And I think Beijing is trying to prevent the fall rather than encourage it. You know, down the road, you know, I could see Beijing changing tack and forcefully driving down the renminbi to help exporters. But they're not doing that now because they're so worried about currency outflow, which almost killed the economy in 2015 and 2016.
Just from a capital markets perspective, we've seen money flowing out of Chinese equity markets. We're also seeing less money invested domestically in infrastructure, in capital expenditures of their companies. So is this beginning to happen? And does their administration realize that their economy is starting to get shaky?
Yeah, I think that the Chinese do understand that. You have academics in China starting to say, look, we cannot sustain a long-term struggle with the United States. And right now you're starting to see real signs of stress in the Chinese economy, whether you're talking about the tumbling stock markets, you know, the currency that looks like it's in an early stage of collapse, all of the debt defaults, you know, private companies, the problems with the peer-to-peer lenders, it just goes on and on, Mitch, all the problems. And I don't know if Xi Jinping has any answer to this except to try to take on more debt. And Chinese people are starting to look at this and say, no, this doesn't work.
But if they continue to take on more debt there, do they have the wallet to buy our debt? Because that could drive our interest rates even higher if there's no bid coming from China for U.S. Treasuries.
Yeah, well, you know, China's going to have to sell dollars to support their currency. They've been doing that up to now over the last several months. They're going to have to do more of that just because of their own internal problems. So, you know, China's going to do what it's going to have to do because their economy is at the point where, you know, anything could, if it goes wrong, could trigger those crises of confidence that we saw 3 years ago.
If we're getting tough on China, why didn't we stick by that ban on ZTE in this country? It appears that the sanctions that were put back in this defense bill were stripped out again.
Yeah, you know, amen to that. You know, we should not have given them relief. But administration officials don't talk to me. But my guess is this Wednesday there is the deadline on Qualcomm's deal to buy NXP, the semiconductor company. That deal will be held up if China does not give approval. My guess, Dagan, and this is just pure speculation, is that the administration gave relief to ZTE so that Qualcomm will get that approval for the acquisition. I don't know, but it makes a lot of sense to me that you could have a tit-for-tat sort of this, you know, we'll do something for you, you do something for us.
So we've got $34 billion in Chinese imports right now that have tariffs on them, that they've retaliated dollar for dollar, if you will. Another $16 billion coming, an additional $200 billion that's being studied. Right. Do you think that the United States puts a tariff on every dollar worth of imports into this country, more than $500 billion? Do you think that happens?
I think we get up to maybe $400 billion. It's just my guess, you know, and this is nothing that I know. It's just sort of thinking about it, that President Trump will actually go forward with the 200 and more beyond that. I don't think we get to the whole 505.5 But, you know, we're going to get very, very close.
And there's really no way to truly know how China retaliates, is it?
Yeah, Xi Jinping is a tough guy. I mean, Larry Kudlow said at that conference a couple days ago, look, you know, the Chinese trade officials, they want to deal with us, but Xi Jinping is saying no. So this has become very, very political. They're heading into their August conference, the Communist Party senior officials at Beidaihe. They're going to be talking about this. This is the #1 topic on their agenda because Xi Jinping is in trouble politically because he now owns this crisis.
How quickly does this show up when people go to a store and want to buy something? They can't find it or they have to pay a lot more for it?
I don't think that's a problem because, you know, China is no longer the low-cost producer. Companies can shift production very, very quickly. The only company that can't shift production on a dime is Apple because they're stuck with Foxconn. Foxconn is in Shenzhen and other locations in China. Apple can really get hurt because they're going to be the #1 target that the Chinese officials are going to look at. Yeah, they might like Tim Cook today, but tomorrow they see that he's the weak point in the U.S. economy.
Gordon Chang, great to talk to you.